Let it be said that when a football stadium full of fresh college graduates boos their commencement speaker for mentioning Bitcoin, you know we are early. This podcast is for information and entertainment purposes only. Nothing on this podcast should be construed as financial advice. All views expressed on this podcast are solely the opinions of the host and/or any guests that we might have from time to time. Nothing on this podcast should be construed as a specific inducement to make a particular investment or to follow a particular investing strategy. Hello, you sexy sat stackers, and welcome to the latest episode of the Bitcoin Bulletin Podcast. What a glorious day it has been here on the sunny space coast of Florida. We had yet another rocket launch around lunchtime. Then it was a beautiful, almost cloudless 87-degree day. That works out to about 31 degrees Celsius for those of you who don't use freedom fractions. Fortunately, there has been a nice breeze all day and the humidity isn't completely stifling yet. That being said, we are getting to the time of year when it gets a little uncomfortable in my studio. In order to have the best sounding audio quality possible for recording this podcast, I usually have to turn the studio air conditioning off. It isn't necessarily that loud, but for whatever reason, it interferes with the recording in a way which is just about impossible to clean up with every noise canceling tool I've tried. So basically, I'm forced to either record somewhere else or push the recording back time later and later until it is cool enough and I don't swelter away like I'm recording in a sauna. And for those of you who like to sauna, believe me, it is very uncomfortable trying to actually work in a sauna. As I alluded to in the intro, video of the graduates at Ohio State University's commencement has gone viral for their reaction to commencement speaker Christopher Pan booing when he brought up Bitcoin during the speech. Barstool Sports, who is, Dave Portnoy, definitely doesn't get Bitcoin, and he's been no fan of Bitcoin. He used to mock Marty Bent when he worked there as Bitcoin Marty, wrote about it, and their article in barstoolsports.com wasn't necessarily pro-Bitcoin, but they did point out that the Bitcoin community is loving the booing as they're laughing at the students coming out of college in thousands of dollars in debt, booing someone who is pitching Bitcoin. It's so early is the most common response in all of the replies. And that is a fact. In fact, that's exactly what I said. These are supposed to be America's youngest and brightest, although with the fact that almost no men go to college anymore. Last time I looked at the statistic, it was more than 60% female. And a lot of the males that are going to college in the United States nowadays are on foreign visas, so they're not even U.S. citizens. That college just isn't what it used to be, especially with the obscene amounts of debt that you have to go into to get a degree that apparently won't even help you get a job nowadays. But I digress. What I wanted to speak to you about today was the "and then they fight you" phase. I've already said repeatedly, probably in one of the very first episodes, if not my very first episode of the Bitcoin Bulletin Podcast, that those in power are not stupid. They know they can't stop Bitcoin. They also know the threat that it poses to them in their modern fiat Ponzi. Since they know the protocol is unstoppable, they're basically fine with letting investors, people in quote unquote invest in Bitcoin, make a profit, and then of course pay taxes on that profit. But to keep it under control, they have from day one set out to make it as inconvenient as possible to use Bitcoin in the way that it was intended. Hence the onerous capital gains requirements for even the smallest Bitcoin transaction, despite the fact that currencies in general are treated with a de minimis exemption. And that applies to every other currency where you don't have to pay capital gains tax if you go, say, to Japan and bring back a bunch of yen. And then when you sell that yen back when you're in the United States, they don't make you file a capital gains reporting for that. Or if you're in Japan and you're using that yen to make a coffee purchase or to buy sushi, they don't make you file capital gains reports, despite the fact the yen may have gone up or down in value while you were there, which is obviously the exact opposite of the way they treat Bitcoin. They know about the 4-year cycle, and they know that adoption comes in huge sprints as the price pumps during the euphoria phase of that cycle. And they are convinced that if they can just FUD the price of Bitcoin for a few short months, once every 4 years, that they can hold off the reckoning that Bitcoin is bringing to their fiat-enabled way of life. basically by tamping down the bull run, by tamping down the all-time high. They reduce the euphoria. They reduce the adoption, the newbies, the newcomers, the normies flooding into Bitcoin, because most people, let's face it, get into Bitcoin because of number go up. You often see that meme that says, that Bitcoin was a horrible buy at 15,000, but I got to have it at 60,000. That sort of thing. The pump in the price attracts people to Bitcoin, and then they put in their 1,000 hours of education or whatever, and they learn about Bitcoin. They become orange pilled, and they learn what Bitcoin is really all about, the promise of Bitcoin. And that is what they're trying to, I believe that's what they're trying to put a lid on. I firmly believe, for example, that the double top during the last cycle was in part due to a coordinated attempt to try and knock the top off just enough to tamp down on adoption. For example, if we had seen $150,000 Bitcoin last cycle, like many people were predicting or forecasting, a lot more people, even businesses or possibly countries, would have aped in. Now, while they would have aped in at the top and it would have hurt them, the point being there would be more people, more businesses, more countries potentially getting into Bitcoin, and some of them wouldn't panic sell, and they would learn their lesson and do their research during the bear market and would have become Bitcoiners. We saw a similar abrupt end to the 2017 all-time high euphoria with the price manipulation of the newly launched Bitcoin futures, all perfectly timed just to nip the tip, so to speak. Today, we're seeing the screws turn in subtle, but, well, not so subtle ways, additional ways, and the strategy unfolds as the strategy unfolds for the administration's attempt to keep this looming bull run under control. In the long run, they're all doomed to fail. Bitcoin is unstoppable after all, but their response to Bitcoin is exactly the same as it is to the looming debt crisis or to the looming insolvency of Social Security, etc. They know that it's inevitable. They might know that that the US dollar will eventually collapse, that Social Security will go bankrupt, that Bitcoin will eventually surpass the US dollar. But they're doing what politicians always do. They're kicking the can down the road for as long as possible. And for Bitcoin, they think they only have to do so once every 4 years. Okay, we have a lot to talk about, but before we do, as usual, let's take a look at the vital statistics. Of course, today is Wednesday, May 8th, 2024, and that means it's DCA Wednesday. And in a little bit, we're going to get around to making our 146th DCA stack. At the time of this recording, we are sitting at a block height of 842,619, and Bitcoin is ringing in at a US dollar value of $61,300. And while that might seem like Bitcoin is absolutely tanked today, that is significantly more expensive than the $57,990 we saw last DCA Wednesday at this time. And of course, as a result, we're going to get almost 100 fewer sats per dollar. Each cuckbuck is going to purchase us 1,631 sats, when last week each dollar bought us 1,724 sats. So, hey, as I often say, zoom out. Despite the fact that the normies out there are talking about how Bitcoin is tanked in price today, it's actually up several $1,000s from last DCA Wednesday. Of course, it's a little too soon to be thinking about this, but the current block puts us 207,380 blocks away from the next minor reward halving. We just had that big halving event at block 840,000, and the next halving will occur at block 1,050,000, and that's currently going to be approximately March 20th of 2028. As you know, the halving cycles I've been talking about, the FUD cycles that I was talking about in the then they attack you phase part of the intro, are all revolve around that minor reward halving, which kicks off those 4-year cycles. And we're just less than 4 short years away from the next one. This one hasn't even really gotten started, and we're already just 4 years away from the next. So TikTok next block, Bitcoin marches on. Bitcoin's current US dollar price gives it a market capitalization of $1.21 trillion. That is $70 billion more than just last DCA Wednesday, and closing back in on that 1.32 trillion-ish market capitalization of silver, which we eclipsed just briefly for a day or so, and significantly shy of the gold market cap of 14.056 trillion. So that shows you just how far Bitcoin has to go. If you're starting to think that, that Bitcoin might have pumped as high as it's going to pump, the 4-year cycles are over, But at the same time, you see that Bitcoin is at least as useful as gold, that its role in the future is as digital gold. If you believe that, then you should be comfortable in believing that Bitcoin has basically 14x more to go from here, just if it fulfills the role of digital gold. Not even if we see hyper Bitcoinization and Bitcoin adopted as a currency or a global store of value one day. For those of you who continue to value your wealth in shiny yellow rocks, it's a little bit more expensive for you in terms of gold to purchase just one Bitcoin this week. It will currently cost you 26.8 ounces of gold to purchase just one Bitcoin. And even with the price of gold near all-time highs in US dollar value, that is still 1.5 ounces more to purchase just one Bitcoin than it would have cost you just last Wednesday. I have said over and over and over again that I believe that by the end of this year, by the end of 2024, we're going to be referring to Bitcoin in terms of pounds of gold and not ounces of gold. We've eclipsed the 2 pound mark occasionally. I think there were 2 or 3 DCA Wednesdays, 3 or 4 DCA Wednesdays, where it would cost you 2 pounds of gold to purchase just one Bitcoin when we were at that new all-time high in the $72,000, $73,000 range. That was, maybe a little bit short-lived because of the hype around the Bitcoin ETFs launching. It was definitely premature. We have never seen Bitcoin set a new all-time high, before the halving, right before the halving. It's always been 6 to 18 months after the halving. And then we have the bear market, the crypto winter until the halving, and even somewhat after the halving. As I mentioned before, Bitcoin often goes down after the halving in kind of a sell the news sort of thing. And then several months later, probably about the middle of the summer, we would expect to see Bitcoin just kind of gradually start working its way up, maybe even imperceptibly to basically when it would eclipse the previous all-time high, which it already has. And then by November or December, Thanksgiving or Christmas time, we would be expecting to see Bitcoin just start exploding and start setting all-time high after all-time high, as it has in the past. I'm getting a little bit ahead of myself. I need to continue on to the vital statistics here. For those of you who value your wealth in pizza, one Bitcoin will purchase you 3,428 large pepperoni pizzas from Papa John's. That is one pizza a day for more than 9 years. And that is a heck of a lot of pizza for just one Bitcoin. We're just a week or so away from Bitcoin Pizza Day, which is the anniversary of when Laszlo purchased 2 large pepperoni pizzas, or I guess 2 large Papa John's pizzas for 10,000 Bitcoin. And we are probably not that far away from seeing the pizza flippening. It would be conceivable that even during this bull run, we'll see the flippening, where instead of 10,000 Bitcoin for 2 pizzas, you'll get 1 pizza, 10,000 pizzas for 1 Bitcoin. It is already getting warm in here. I started recording a little bit sooner than I had planned. We're a few minutes away still from sunset. So while it is cooling off, the sun's still beating down on the studio. And I am starting to sweat. So hopefully I will be able to keep my head here. Otherwise, I'm going to have to hit pause and finish this podcast in an hour or so after I can cool it back down. The air conditioning does a good job of cooling off my studio, but once you turn it off, the sun is going to win. And, I've lived in some places where the absolute temperature gets a lot hotter than it does in Florida. I was in Phoenix when they set their all-time record high of 122 degrees Fahrenheit. So hot, airplanes couldn't fly. And that's a special kind of heat, but the Florida heat, that tropical heat, if you've ever been anywhere tropical, you know that afternoon sun can just be brutal. Of course, the humidity only makes it harder to stomach. For example, in Phoenix, an 80-degree day would be absolutely gorgeous. And here, 80 degrees is sweaty. If you're not sitting in the shade, even if you are sitting in the shade, you end up needing to change your shirt just from the amount of moisture accumulating on your body. But again, I'm getting way off topic. Looking at the statistics, according to Clark Moody's dashboard, there are approximately 62 blocks worth of transactions pending in his mempool. That is a little bit less than last week when he was showing 78 blocks worth of transactions pending in his mempool. And accordingly, his fee estimator is recommending that if you need to do an on-chain Bitcoin transaction, that you need to include a fee of 35 sats per VByte to guarantee that transaction shows up in the next block. If you have up to a day to wait, he says that his dashboard is showing that a fee of just 16 sats per VByte will be mined within a day. If you have a couple days to wait, they're recommending a fee of 12 sats per VByte will be mined within a week. Mempool.space is telling a significantly different story. They're saying that a high priority transaction only needs a fee of 13 sats per VByte, which works out to about $1.12 in US dollar terms. That is a lot cheaper than I've seen it because I've been waiting to open and close a few Lightning channels. All last night I was watching fees, and they started to get down to where I was thinking about a 14 sat per VByte fee. And then we had like an hour and 10-minute long block. In fact, there was one period of time we had 3 blocks in like a 3-hour span. The blocks were coming in so slow that fees they ratcheted up. They were greater than the 35 sats per VByte that Clark Moody is recommending right now. So I did not open or close any of those channels. But hey, if fees stay in that 13 sat per VByte range, maybe later tonight after I finish this podcast, I'll open up that channel. I'm itching to open up on my Lightning node. Mempool.space is recommending about 13 sats per VByte across the board, with their medium and low priority transactions also recommending a 13 sat per VByte fee. And then their no priority transaction is still recommending a fee of 10 sats per VByte. So if you have a little while to wait, maybe you can try as low as 10 sats per VByte. Although make sure, because I have seen fees wobble quite a bit in the last few days, they've definitely been a lot higher. I would make sure you know how to use replace by fee, or use a wallet that will let you change the fee on your transaction so that it doesn't get stuck, especially if it isn't a super high priority transaction, but one that you don't want to wait a week or 2 weeks to see confirmed. All right, that metric that you know has been my favorite metric for most of this podcast history, Bitcoin's 24-hour average transaction rate, is down a little bit from last week. It's still pretty healthy at 5.04 transactions per second. That's down from the 5.8 transactions per second we saw last Wednesday, and way down from the 7.12 transactions per second we saw right after the halving, when the Rune shenanigans launched and the spam was just absolutely flooding the mempools. The Ordinals and Inscriptions latest creation, the Rune, which apparently fizzled, at least so it appears. With the fees down to 12 or 13 sats per VByte, where they're at right now on a weekday in the middle of the week when fees normally aren't at their cheapest. That's actually a really good sign. And speaking of on-chain, we're getting really, really close to the next mining difficulty adjustment. It's been a couple weeks since the last one. We're just 69 blocks away from the next mining difficulty adjustment. Nice. As you may or may not know, the difficulty it takes to find the next block is adjusted every 2016 blocks, which is in theory every 2 weeks. But again, Bitcoin doesn't think in terms of human time. It thinks in terms of block time. So every 2016 blocks, it looks at the average time it takes for blocks to come in and either makes it harder or easier to find a block, with the goal of keeping those blocks coming in at an average of 10 minutes. And we're looking at another day until that adjustment, sometime tomorrow. And depending on where you get your data, that's going to be a relatively large difficulty decrease. That'll be the first decrease in a while. Last adjustment was a 2% increase. And this is going to be a decrease of 5.4 to 5.6%. And that is because blocks have been crawling. As I mentioned, I saw a period last night where in a period of 3 hours, only 3 blocks came in. And right now, the average over this difficulty epoch is 10 minutes and 36 seconds. Obviously, a lot slower than that 10-minute average, and hence the forecast difficulty decrease. And there's a lot of reasons for that. Obviously, with the miner reward halving, there are probably people turning off some of those less profitable miners. Also, we talked about last week the demand response. They were talking about in Texas how they were forecasting their grid was going to be strained, and they were talking about blackouts. And I mentioned, hey, Bitcoin already fixes this. In fact, we've seen Bitcoin fix this. We have had a lot of really bad weather too, tornadoes, et cetera, in North Texas and Oklahoma. Horrible tornadoes the last 2 weeks. So who knows if some of this is weather related as well, but hash rate ebbs and flows, especially as new miners come online. Mining companies start making plans for retiring their old miners, bringing on some of those new miners. But ultimately, again, if you zoom out, just like with Bitcoin's price, hash rate, hash power is ultimately up and to the right, at least as impressively, if not more so, than Bitcoin's price history. Real quick, before we carry on, I want to take a minute to thank those of you listening on your favorite podcasting 2.0 apps, such as Fountain. You can earn sats for listening to your favorite podcasts on Fountain, but you can also help support your favorite podcast through the value for value model by streaming sats on a per minute basis, or by sending a boost to your favorite podcast. And of course, a boost is a lightning tip, and it's a shout out basically that comes as a lightning transaction. So you can send a message along with some sats. And if you do choose to boost this podcast, We would appreciate that, and we will read it on the following episode, the forthcoming episode of the Bitcoin Bulletin Podcast. We do not have any boosts to read right now. Understandably, Satoshis have been getting more and more expensive and harder for you to part with them. We're not begging for money, but I have appreciated those of you who have been supporting the podcast. I would like to ask you to help support the podcast in a non-financial way. You can easily help support the podcast by feeding the algorithm monster. For example, you can follow the podcast Twitter handle at BTC Bulletin Pod on Twitter or X. Again, at BTC Bulletin Pod. The more followers we have, the more people are likely to see our tweets. They're more likely to see information about Bitcoin, information about this podcast, and hopefully we'll be able to orange pill some more people. So that helps support the podcast. It also helps support the community, again, by helping orange pill more people. But you can also support the podcast by making sure you have automatic downloads enabled so that you make sure you see this podcast in your featured podcasts every week when it comes out. Depending on what platform you're listening to, there are different ways to rate or review or like this podcast. And if you're able to rate this podcast, obviously a 5-star rating would be fantastic. But any rating that you think is fair will help feed the algorithm monster. Again, there is no, all news is good news, as they say. All attention is good attention. All interaction is good interaction. Any engagement that we get on Twitter or any engagement we get with the podcast helps feed that algorithm monster, helps push this podcast out to where more people see it as a featured podcast, and hopefully more people will start listening as a result. So again, like and you don't have to subscribe. We don't have a subscription based on Twitter, but like and follow us on Twitter at BTC Bulletin Pod, and like, subscribe, and rate the podcast. That would be as helpful as absolutely anything else you can do. Of course, if you choose to help support the podcast financially, you can do that as well. Again, you can stream sats or boost on Fountain, and there are other ways in the show notes that you can help support the podcast if you choose to do so financially. But again, the most important thing is to help us promote that podcast by feeding that algorithm monster. So despite the fact I appreciate all the sats that y'all have sent to us in the past, I appreciate the follows as much or more so. Speaking of followers, our geographic distribution of listeners has pretty much done what Michael Saylor would like to see happen to the Bitcoin Core protocol, and that is ossified. We have had no change, it doesn't look like, since January. Our top 10 countries for listenership remain as follows. Number 1 remains the United States. So hello and thank you to all my fellow Americans out there listening. I appreciate your continued listenership. Number 2 remains Argentina. Again, hola, muchos gracias amigos in Argentina. Number 3 remains Germany. So guten Abend. Dankeschön, mein Freund in Deutschland. Number 4 remains Luxembourg. Again, guten Abend or Morgen to those of you who speak Luxembourgish. Danke für alles, mein Freund in Luxembourg. Number 5 remains Canada. So thank you to those of you in the formerly frozen white north, now the beautiful attic of America, sitting up there as our 51st state. As I forget who keeps calling it the 51st state. I know that Greg Foss, who is Canadian, calls it America's attic, which I heard that from him the first time, I believe, and found that an amusing way to think of Canada. What a beautiful, lovely country, just to the north of the United States. So easy to get to. So many Canadians come down here to Florida every winter. We have a lot of Canadian neighbors who all found their way home now because it's getting really hot here and it's getting really gorgeous up there. Number 6 remains Spain. So again, a big muchos gracias amigos in Spain. Thank you so much for listening. Number 7 remains Colombia. Again, muchos gracias amigos. Thank you for listening in Colombia. Number 8 remains Sweden. So hey, to all of you listening in Sweden, thank you so much. Number 9 remains the United Kingdom. So thank you to our cousins across the pond in the United Kingdom. And number 10 remains Venezuela. Again, hola, muchos gracias amigos in Venezuela. It's really flattering to see that we have listeners all over the world. The list continues well beyond the top 10. Like, for example, Mexico is still lurking down there at number 11. It's really flattering that we have so many Spanish language listeners out there. I mean, percentage-wise, they're the number 2, number 6, number 7, number 9, number 10, and possibly even number 11 countries for listenership. So that's really cool. And I apologize, my Spanish isn't what it used to be. I used to actually speak a lot better Spanish when I lived in Arizona and New Mexico. But like a lot of things, foreign language, the human brain is a muscle that needs to be exercised. Foreign language is a perishable skill. So I need to brush up on my Spanish. I need to brush up on my German. And I need to learn a little bit more Swedish, because really all I know how to say to our friends in Sweden is hey. But once again, I'm getting way off topic here. On to the news. Of course, as I mentioned, the news is often the price, because for normies, price is the news. And again, we're ringing in at about $61,300, which a lot of people are talking about how Bitcoin's crashed. We've seen Peter Schiff out there gloating about the price of Bitcoin, even though Bitcoin is still up in gold terms. I mean, how many times have I let off with saying the price of Bitcoin is down today? It seems almost, I mean, I know looking at the chart that I have in front of me in my show notes that it's been far fewer times than the times I've let off with saying that Bitcoin is up, but it just seems like recently you've said the price of Bitcoin is down today, when in reality, it's only down for the day. If you zoom out, Bitcoin is way up. That's why people like the OG Adam Meister at TechBalt says, long-term thinking, strong hands, that you need to hold Bitcoin for at least one halving cycle, which works out to 4 years. If you hold Bitcoin for 10 years, even more so. Adam Meister has his 210,000 block theory, which says that if you look at the price of Bitcoin and you go back in history 4 years, Bitcoin will always be worth more today than it was 4 years ago. 4 years from today, Bitcoin will be worth more than it is now. That's just the way it's always worked for Bitcoin. And of course, if you're into Bitcoin, you should be talking about holding it forever. Forever, Laura, forever, as Michael Saylor is famous for saying, because, we're not here to trade. We're here to carve out our little chunk of the new financial system. All fiat currencies eventually collapse. And even if it weren't for Bitcoin, the US dollar's days are numbered. It won't be around forever. Nothing is around forever. And when it does go away, sooner or later, we're fortunate that we have Bitcoin, and we're trying to gather as much of a stack of Satoshis as we can before that happens. So it isn't about buying and selling. It's not about the price going up. Ultimately, if the price will go up if the currency you're comparing it to is collapsing, that doesn't necessarily mean the value is going up. But if Bitcoin just continues along a gradual normal adoption curve, its price will inevitably go up, because there's only ever going to be 21 million Bitcoin. As more and more people want Bitcoin, the only way to guarantee you get it is to outbid the other guy, which means paying a little bit more, or paying a price that maybe I might be willing to give you some of my Satoshis for. And that means the price is essentially going to go up forever. Like the other saying goes, everything divided by 21 million, because there's only ever 21 million. So we're trying to grab as many sats of that 21 million Bitcoin as we can, while people are still willing to sell it to us. Okay, getting back to the then they fight you. As we discussed last week, the US government has been on a warpath, going after mixers and anonymizing services, arresting the founders of Samurai Wallet, for example, and leading to Wasabi pulling out of the United States completely. Then they arrested Roger Ver on tax evasion charges stemming from his Bitcoin holdings, even though he renounced his citizenship like 8 years ago. You can never escape the long arm of the law. Now, yesterday, it was reported that Robinhood has been served with a Wells notice by the Securities and Exchange Commission, which is basically a legal notice that says, hey, you're breaking the law and we're going to sue you for securities violations. Yesterday, Decrypt published an article titled SEC Crypto Crackdown, Every Company That Is Being Investigated. The SEC is taking aim at crypto companies in the United States. Here's who has disclosed a Wells notice or is reportedly under investigation. The article, which is less than 24 hours old, says almost every week lately, it seems there's a new announcement that the U.S. Securities and Exchange Commission has gone after yet another crypto company for alleged securities violations, and the crackdown doesn't appear to be cooling anytime soon. Here's a handy running list to keep track of all crypto-related actions that the SEC has taken as of late. Okay, so I'm going to do a lot of skipping forward here and injecting some of my words from time to time, but their list is as follows. Under imminent enforcement, they list the Ethereum Foundation, saying, last week, previously redacted portions of a lawsuit filed by Ethereum software firm Consensus against the SEC revealed a bombshell. The agency has secretly considered ETH to be a security for over a year. My words now, that has been something that's perplexed a lot of us Bitcoin maxis. Obviously, Bitcoin is not a security. There's no centralized, agency or controlling authority or person controlling Bitcoin like there, is with Ethereum and all the other S coins. They were able to roll back the Ethereum blockchain when there was a hack and things happened that they didn't like. That's something that can't happen with Bitcoin. We had the Immaculate Conception. They did not. 70% of Ethereum was pre-mined and is held by those insiders. It has all the hallmarks of the Howey test. Now, whether or not you're libertarian like me and thinks the SEC should go pound sand, that it shouldn't exist, that all of this is basically unconstitutional. Putting that aside, if you're looking at their framework, ETH fits this. It fits the Howey's test. It's a security it's just black and white. If you have eyes, it should be obvious. So the fact that Gary Gensler had been refusing to call ETH a security had a lot of people scratching their heads, thinking, is it because he's been bribed? Is it because Ethereum's just gotten too big and he doesn't want to rock that boat? We didn't know, but now, thanks to this article and the lawsuit by consensus, we know that they, in fact, do consider ETH a security and have done so for more than a year. So perhaps the reason why Gensler was refusing to comment on it was because it was a secret and it was part of that ongoing lawsuit. Who knows? Back to the article, they next list Robinhood. On Monday, Robinhood's digital asset arm, Robinhood Crypto, announced that it had received a Wells notice from the SEC, effectively a notification the company will soon be sued for alleged security violations. They speak a little bit more about Robinhood, and then they go on to list Consensus. While the SEC has not yet sued Consensus regarding the company's relationship with Ethereum, the regulator did issue a Wells notice in April regarding MetaMask, an Ethereum wallet created by the software giant. They talk a little bit more about Consensus, and then they go on to talk about Uniswap Labs. On April 10th, the SEC sent a Wells notice to Uniswap Labs, the New York-based company behind the Uniswap decentralized exchange, informing the company that it will soon face a lawsuit over alleged securities violations. Then they break it down into prominent ongoing cases. Of course, first and foremost is the lawsuit against Coinbase. In one of the SEC's most prominent ongoing crypto legal suits, the regulator has been battling San Francisco-based crypto exchange Coinbase tooth and nail since filing a lawsuit against the firm last June. The SEC accused Coinbase of operating as an unregistered securities exchange, broker-dealer, and clearinghouse. It additionally sued the company over its crypto staking services. Blah, blah, blah. They continue on a bit, then they go on to list Binance. The SEC's suit against Binance has largely proceeded in tandem with its case against Coinbase, given both massive crypto exchanges were sued within a day of each other last June. Like Coinbase, Binance was accused of operating as an unregistered securities exchange, broker-dealer, and clearinghouse. The exchange was also accused of failing to properly restrict U.S. customers, meant to use Binance US, from accessing Binance.com, blah, blah, blah. Then they list Ripple. Perhaps the most intensive legal battle fought thus far by a crypto company against the SEC has been waged by Ripple Labs, the company associated with crypto token XRP. Since 2020, the SEC has alleged that Ripple's sale of XRP constituted an illegally unregistered securities offering. All right, my words now. Of course, Ripple won a partial victory in this ongoing case when a judge ruled late last year that the sale of XRP directly to customers did not violate securities laws. So that's an ongoing case. That's just one ruling, and there are layers, appeals, additional judges that this will be subject to scrutiny to. So that's, too soon to tell. But back to the article. Then they list Kraken. 9 months after crypto exchange Kraken agreed to pay the SEC $30 million and halt its crypto staking programs in the United States, the company was hit by another SEC suit in November. This one, like the suits against Coinbase and Binance, arguing that Kraken operates as an illegally unregistered securities exchange, broker-dealer, and clearinghouse. My words now, ladies and gentlemen, that is just the SEC. There are other enforcement arms of the federal government that are, like, for example, when the IRS is prosecuting Roger Ver. Late last week, for example, news broke that the U.S. government may have its sights set on Cash App for possible Office of Foreign Asset Control violations, amongst other potential allegations. No BS Bitcoin ran an article entitled "Federal Prosecutors Are Investigating Jack Dorsey's Block for Alleged Gaps in Compliance." The article states federal prosecutors are digging into internal practices at Block, the financial technology firm launched by Twitter co-founder Jack Dorsey, discussing with a former employee alleged widespread and years-long compliance lapse at the company's two main units, Square and Cash App. And that is according to a report they're citing from NBC News. My words now. Of course, the "then they fight you" doesn't just include suing companies into oblivion or arresting Bitcoin promoters and developers. It also includes holding Bitcoin companies to different or impossible standards. For example, do you remember when Caitlin Long attempted to get a Federal Reserve master account for her fully reserved Avanti Bank in Wyoming? It is basically almost completely impossible to run a bank without a Federal Reserve master account. It's required for institutions to have direct access to the Federal Reserve's payment systems for your transactions to settle with other banks, etc. So by withholding that, they're basically neutering Avante Bank. It won't be able to do any function other than just hold money. Avante Bank was fully reserved, which means it would be practically immune to bank runs and insolvencies. Normal banks, the traditional banks, there's no reserve requirements now post 2008. So they immediately take in your money and then they immediately lend it out, all of it. And if you try and go to your bank and withdraw large amounts of cash, they won't have it. They'll make you make an appointment if they're even willing to give it to you. You've probably seen a lot of videos on Twitter or TikTok, wherever you get your news. You watch your memes with people going in demanding their money and the banks refusing to give it to them. And not even large amounts, like $500, $1,000. All over the world, too. This isn't unique to the United States. One of the videos actually took place in Australia. Basically, this would be a threat to traditional banks, because who wouldn't want to hold their money in a bank that keeps 100% reserves instead of one that doesn't actually have your money when you want to withdraw it? So along these lines, the then they fight you also includes the SEC's rule. Now, this isn't a law. This is something they made up out of thin air. This is something that they just decided was a rule they're going to enforce. SAB 121, or the Staff Accounting Bulletin 121, which basically said that banks cannot have any involvement with virtual assets, or they're going to require to account them in a way that would make it impossible for the banks to do business, prohibitively expensive, if not outright impossible. Well, the good news is, for once, the United States government appeared to be doing something positive, breaking just an hour ago, according to the financialservices.house.gov. The House passes HJ Res 109 with bipartisan support to overturn basically SAB 121. And perhaps the biggest surprise here is 21 Democrats actually broke ranks with their party to pass this legislation. So this is passed the House. It would overturn that SAB 121 and let your banks custody virtual assets, deal with Bitcoin, etc. But this is only passed the House. There isn't even a corresponding bill in the Senate yet. And of course, the House is a much, much larger body than the Senate. And quite frankly, the Senate is much more beholden to Wall Street. The House representatives are elected to 2-year terms. They're basically running for election at all times, which means they're more reactive to their constituency, that they'll bend to pressure from the people more often. Whereas the Senate has a nice cushy 6-year long term. So as soon as they get elected, it's off to feathering their nests and making as much money as they possibly can, making as many political contacts as they can in the swamp of DC, without even having to worry about re-election for 4 or 5 more years. Because everybody basically starts running for election a year or 2 years before. So representatives, since they're elected every 2 years, means they're basically always running for election, which means if you call them and you yell at their staffers, you're more likely to get the reaction you're looking for. Anyway, it is unclear what his chances of passing or even advancing in the Senate are. However, Senator Cynthia Lummis of Wyoming has been pushing for a matching resolution in the Senate. So it's possible it will take up traction in the Senate, although I don't hold out much hope. Because remember, that's where Elizabeth Warren rules the roost. The Senate's controlled by Elizabeth Warren and the Democrats, and they've been outright hostile towards Bitcoin every step they can, building their quote-unquote anti-crypto army. And even if it does pass the Senate, naturally, President Joe Biden has promised to veto the bill if it does make it through the Democrat-controlled Senate, with the White House going so far as to issue a statement this morning before the legislation had even been voted on in the House, issuing the statement from the Executive Office of the President, Statement of Administrative Policy. The administration strongly opposes passage of HJ Res 109, which would disrupt Securities and Exchange Commission's work to protect investors in crypto asset markets and to safeguard the broader financial system, blah, 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 a bunch of just absolute horse shit. And then he goes on to say, if the president were presented with HJ Res 109, he would veto it. So Biden's made the promise to veto this because this administration has been no friend of Bitcoin at all. And I know for the longest time, I used to almost vomit every time I would hear Simply Bitcoin say, this is not the party of blue or red, this is the party of orange. It has nothing to do with politics. Bitcoin's for everybody, blah, blah, blah. Meanwhile, Republicans are lining up one after another to support Bitcoin, and Democrats are lining up solidly against Bitcoin. They say, well, Donald Trump was against Bitcoin too, because basically he said, if you're a patriot, use the United States dollar, something he's since backpedaled on, saying that Vivek Ramaswamy schooled him on Bitcoin, and now he's a supporter of Bitcoin. Either way, even if you think that Donald Trump is a big idiot and he's a flag waving, MAGA Republican that thinks you should use the dollar because that's your patriotic duty, that is nowhere near as egregious as just this flat on attack by the U.S. government. Now, we just listed it off, all the different companies the SEC is suing. The SEC is the Biden administration. The boss of all those agencies. Those are all executive agencies. They all report directly to the White House. The president can tell them to jump, and they have to say how high. Occasionally, the FBI likes to say, the Department of Justice likes to say that they have some independence because the rule of law requires it. But that's also horse crap, too, as you can plainly see by just the state of prosecutions in the United States, that every branch of the executive government has been weaponized. And this administration has taken it to all new levels. And it's not just the United States. You see this horse pucky in Canada. You see it in Australia. For example, in Canada, there's legislation pending which would make you not only do full KYC on every Bitcoin you purchase, but make you disclose every Bitcoin that you own. So the crackdown is continuing there. We've already seen all kinds of travel rule shenanigans and crackdowns on self-custody of Bitcoin in the European Union. So it isn't unique to just Joe Biden in the United States. But my point being, the then they fight you phase is now fully engaged. And who knows how long it will take. Obviously, eventually they will lose. The only question is how long it takes, what path politics takes in the United States, and whether or not you outhodl the government, whether you outhodl fiat, whether you outhodl the IRS, whether the U.S. Ponzi scheme collapses before they have a chance to do too much damage. Not that they can really do any damage, but how soon the U.S. whether we either elect new politicians that are all of a sudden magically pro Bitcoin, or the government just becomes so neutered because all they can do is spend every penny they have or print every new dollar they can have just to pay the debt, and that they're so busy juggling the debt that they're just completely neutered. All right, circling back around to the price news. As you remember, I have repeatedly said that I believe the government's current strategy was to try and contain Bitcoin. The current strategy to try and contain Bitcoin revolved around interfering with the approximately 4-year halving bull run. Well, speaking of the next bull run, most of you should be familiar with Plan B on Twitter. He's infamous for his stock to flow model that got a lot of hype up until we reached the all-time high and then started the bear market. He was on, everybody was talking about Plan B and stock to flow. Well, Plan B is at 100 trillion USD on Twitter, in case you're not already following him or don't know who he is. He's apparently updated his stock to flow model to take into account the actual data from this just completed halving epoch, the one that didn't work out the way the stock to flow model predicted it would for whatever reason. So yesterday he tweeted out, average Bitcoin price 2020 to 2024 halving cycle was 34,000, a bit below the 2019 stock to flow prediction of 55,000. But still in normal range and not bad given Bitcoin was less than 4,000 when prediction was made. Refit of S2F with new data below shows similar parameters and results. 0.5 million 2024 to 2028 and 4 million 2028 to 2032. So he's reworked his stock to flow model, dusted it off, and he's out there with a new prediction. And that's saying that basically, and if I recall, he's not saying that the high should be 500,000, or in this case, I think it's looking at the tweet itself. I guess the high is going to whatever, 500,000 for a high this cycle. There it is, 477,665. And then a high of 4,139,805 for the upcoming cycle in 2028. We spoke about that halving that's less than 4 years away now. I think he has some wiggle room in his predictions as well, too, because, for example, he was, when we didn't reach 55K at one point in time, he was trying to say that's what the price should average, which means it should go above that and then be below it for part of the year, and that the average should be 55K. If that were the case, then he's saying the average should be 477,000, not the high, that it would have to go higher than 477,000 because for right now, for example, it's 61,000, 62,000. So you'd have to take however long it's at 60,000 with however long it's at a much, much higher level, and the average would be 477,000. But I digress, not to sound like a broken record, but I do want to remind you that, as I have often said, nobody has a crystal ball. Plan B's forecasts are fun to look at. Just don't rely on them don't rely on him. Don't rely on his chart as financial advice. Like, The numerous people who took to Twitter in the last bear market to blame him for their losses because they tried to trade based on his predictions. And, if you remember, Stock to Flow said Bitcoin was going to get like 125 or 130,000, or at least his cross asset model, because he has his Stock to Flow model and his cross asset Stock to Flow model. And as a result, when Bitcoin topped out at 69,000, people that were trading or trying to trade were waiting to sell at 125 and got wrecked. Another reason not to trade, but also not to believe forecasts. Nobody has a crystal ball. So that being said, my favorite chart, as always, is published by Ecoinometrics. He's at Ecoinometrics on Twitter. I like it because it is not a forecast. It's a historic chart that shows where Bitcoin has been in the previous cycles. And then it also gives an average where, the average of the cycles. So you have the range established by the completed cycles and then a mean. And it kind of hints at a price forecast as merely a possibility by showing how Bitcoin could perform if it were to rhyme, if it were to stay in that range, or if it were to meet the mean or the average of the three. But that's on you. They're not actually making a forecast. They're just showing you data and you interpret it as you will. Either way, I find it thought-provoking, if not entertaining to look at. And their current chart, even though this cycle has just started, shows that if you take the range of the previous completed cycles and overlay them, it establishes an upper boundary of 4,500,000 and a lower boundary of 140,000. So if you were to take that as a prediction, they're saying that the all-time high of this halving cycle could be as high as 4.5 million or as low as $140,000. And again, that's just an interpretation by looking at the range, assuming Bitcoin will perform like it did in the previous cycles. Last cycle, it did. It matched the trajectory, the slope, the shape of the graph, but it fell way below the mean. And those of you that believe in the diminishing return cycle wouldn't be surprised by that. So if we are in a diminishing return scenario and it underperforms that cycle, then even 140,000 is out for an all-time high. Again, we don't know. Nobody knows. We won't know until it happens. One last thing to talk about before we get on to our DCA Wednesday, and that is Dr. Jeff Ross. If you're familiar with him on Twitter, he commonly refers to himself currently as Dr. Bullcrab. He was Dr. Crab for a while, Dr. Bear Crab, depending on how the markets go. Currently Dr. Bullcrab because he thinks that we're overwhelmingly in a bull market, definitively in a bull market, but that the price is going to go mostly sideways for a while, hence the crab, Bullcrab. He tweeted some fiat, kind of Bitcoin related news, but mostly fiat. He tweeted this back on the 3rd of May, so basically right after the last DCA Wednesday. I was pleased to be notified by @BarclayHedge via email on May 2nd, 2024, that Vailshire Partners LP, that's his hedge fund, has ranked number 1 in the multi-strategy category for 2024. The fund is small, but it's significantly empowered by Bitcoin. Onwards. So this is a small accolade for Vailshire Partners. And again, it's a hedge fund. It's TradFi. But it's a hedge fund that's heavily invested in Bitcoin. And it's just another first for a growing club of early corporate and government adopters who are just on the cusp of being not only vindicated for their Bitcoin strategy, but sooner rather than later, they're going to be elevated to legend status. I mean, these are going to be our icons, our role models. When we talk about value investors, for example, we talk about Warren Buffett. Remember, this is going to be the bull run that vindicates Michael Saylor for his strategy with his MicroStrategies, Bitcoin accumulation strategy. It's going to be the bull run that vindicates Nayib Bukele for making Bitcoin legal tender in El Salvador. The neighbor's choosing to mow his lawn again. It's dark, ladies and gentlemen. The sun set a half an hour ago, and there's a lawnmower going right by the studio. That's the second time this happened. And this is a professional lawn service. This isn't just some dude pushing a lawnmower. I mean, it's some dude pushing a lawnmower, but it's not. This is a company. I understand if I were mowing my lawn, it's really hot out there and I don't want to get hot and sweaty right now, but this is a lawn service. Don't mow the lawn at 8:30 at night, especially right next to my recording studio. Anyway, speaking of Dr. Bullcrab, he tweeted out just yesterday, the most interesting and most important race, Bitcoin. And he retweeted from Bitcoin Magazine. I can't stand Bitcoin Magazine because of all the S-coining they're doing. They really showed their true colors at the last Bitcoin conference in Miami, bringing the Bitcoin wizards up and promoting them around, letting them parade around. But it's an interesting tweet nonetheless. And it says, who owns the most Bitcoin? Public companies and countries with the largest Bitcoin holdings. So number 1, it shows us MicroStrategy holding 214,400 Bitcoin. Number 2, it shows us the United States holding 207,189 Bitcoin. This is misleading because they will sell that Bitcoin. Those are seized assets, not Bitcoin that the government invested in. I believe, I'm not an attorney, but it's my understanding the government is required to dispose of assets it seizes. It's not allowed to keep them. So it's allowed to keep cash, but it's not allowed to keep property. And Bitcoin is considered property, so it has to sell it by law. Number 3 is China with 194,000 Bitcoin, and they have absolutely none of the legal restrictions that the United States has. So they'll probably hang on to that. Number 4, remains the United Kingdom with 61,000 Bitcoin. Behind them, just slightly, is Germany, which holds 50,000 Bitcoin. Behind that, Ukraine holds 46,351 Bitcoin. Below that, Marathon Digital holds 17,631 Bitcoin. Then Tesla holds 9,720 Bitcoin, and the list goes down with Hut 8, Coinbase and their measly 9,000 Bitcoin, Riot Platforms, Galaxy, Block, CleanSpark, and then, of course, El Salvador at the bottom of the list with their 5,690 Bitcoin. But that, of course, is climbing, and that's not too shabby considering El Salvador has the population of just a large American city. So, they're not a big company like USA, UK, Germany, or Ukraine, and they're not even as powerful as a major company like Apple. So that's interesting to see. Finally, again, if you remember last week, we also highlighted Dr. Jeff Ross for predicting a significant Bitcoin correction. Of course, I also mentioned in multiple episodes, including the one right before the halving, that I predicted the price of Bitcoin would go down after the halving, but I digress. If you remember, Dr. Jeff Ross also predicted this, predicting up to a 40% drawdown before things get back on track. Remember, the epic face-melting bull run we refer to as the post-halving bull run traditionally hasn't started yet, and it won't start for 6 months to a year after the halving. So we're talking October, November, December before that bull run really gets into high gear. If Bitcoin behaves as it has in the past, I would expect to see things maybe slowly coast up this summer, but really they won't start setting new all-time high after all-time high until around Thanksgiving or maybe Christmas. Okay, on to what makes today and every Wednesday so special, and that is because today is DCA Wednesday. As I mentioned, today is Wednesday, May 8th, 2024, and we are going to make our 146th weekly DCA stack. If you're just following us, or perhaps you don't know what DCA means, DCA is short for dollar cost averaging, and dollar cost averaging is an investment strategy where you invest your money in equal portions at regular intervals, regardless of price. And that is key. You don't pay attention to the price. You just pick a date, a time, and you make an investment always, consistently, regardless of what the price is. For example, our regular interval is weekly on Wednesdays. That is a you do you thing. Some people DCA daily. Most people that DCA into any investment do so on payday. Most people get paid once a week or twice a week. So if you get paid bi-weekly, you can DCA once every 2 weeks. If you get paid weekly, you can DCA weekly. Or if you get paid if you're a gig employee and your pay is irregular, then maybe DCA alongside us on Wednesdays. Again, that's a you do you thing. Do your own research. This is not financial advice, but we are going to invest and have been investing every Wednesday. And our equal portion was just $20. And I chose $20 because I wanted to choose an amount that was small enough that any of you listening to me should be able to come up with on a weekly basis. Again, this is a you do you thing. $20 might be nothing to you if you're sitting, in a mansion somewhere overlooking, a ski resort in Aspen or in the Alps, or if in a very expensive neighborhood in Miami or wherever you are. So this is a you do you thing, but I wanted to keep it simple. I wanted to show that regardless of whether you can only scrape up just $20 US to convert into Bitcoin every week, that it eventually would add up to a significant chunk of Bitcoin. And we've already proven that. For our example, I mentioned this is going to be our 146th stack. Again, we started all the way back on Wednesday, July 28th, 2021. In those 145 stacks, we have converted 2,900 filthy US dollars, including about $65 in fees, into a stack of 9,278,660 sats. And because we bought the highs and we bought the lows and we've just bought consistently, we've purchased for an average cost of $31,254.75. And that is not too shabby, considering we started this between the double peaks of the last bull run. So we started, I was around 39,000, and we bought all the way up to 66,000 something. And then we bought all the way back down, of course. And that's why we have such a relatively cheap average cost basis. Today, we're going to grow that stack. And as usual, we're going to use Jack Dorsey's embattled Cash App. Cash App is not a sponsor of the show, and it might not even be available where you're at, but I like it for small purchases because even though you pay a slightly higher fee than you do with some other services or exchanges, you are able to transfer your Bitcoin to your hardware wallet for free without a mining fee. Also, they'll let me transfer money directly to Cash App, immediately purchase Bitcoin with it, and immediately transfer it to my hardware wallet, which is something a lot of exchanges won't do. Either they won't let you invest your Bitcoin for 5-10 days, or they won't let you transfer it to your hardware wallet until after that money has settled, quote unquote. And even if they do, they charge you a mining fee to move it. So you could spend up to $5-6, even more if fees are really high, to transfer that Bitcoin to your hardware wallet. So basically for small amounts where we're going to rack up a 45-cent fee, more than one 45-cent fee, because I'm not going to transfer just $20 of the Bitcoin to my hardware wallet. I usually like to have a little bit more. Again, a you do you thing. We've spoken about that on past episodes. But the point is that fee at 2.25% comes out in the wash when basically I don't have to pay any mining fees. So while I've been yammering, I opened up my Cash App. For the first time in a while, I actually didn't have any money on my Cash App. So I've added $20. And it, like I said, it's already available for me to invest. So it's as simple as tapping Bitcoin, tapping buy, entering $20, clicking confirm, and boom, just like that, we've added another 31,929 sats to our stack, raising that stack to 9,310,589 sats, getting closer to that unofficial stacking goal of 10 million sats, which I was really worried we were never going to get to when Bitcoin was exploding, when people were talking about $85,000 or $100,000 Bitcoin imminently. If Bitcoin stays in this price range all summer, I'd be happy as a clam because it means we're easily going to attain that 10 million sat goal and higher. Of course, every goal I've ever had, as soon as I've achieved it, I've changed that goal to a higher goal. But I like to set markers. If I'm going to go out for a run, I don't like to set my goal at 3 miles or 5 miles. I like to set my goal at the end of the street. Once I get to the end of the street and turn right, then I would just want to run to the next street. And then after that to the next street. And before you know it, you've run your 3-5 miles or whatever the case may be. It's just mentally, it's a lot easier. And it's certainly a lot more fun to do it that way with Bitcoin, to reach that goal, feel like you've accomplished something. And speaking of accomplishing something, if Bitcoin goes to just 100,000 this bull run, that stack of 9.3 million sats would have a US dollar value of $9,310.59. And that is not too shabby at all, considering we only stacked, $2,920 worth of fiat to do that. If Bitcoin goes to $1 million one day, which I think is easily plausible, maybe not this bull run, but certainly by 2030 or so, this stack, even if we don't add another single Satoshi, will have a US fiat value of $93,105.89. And it would be hard for anyone to argue. And I don't care whether you're looking at me saying $20 is nothing. Even if that is the case, and you were used to buying $1,000 lunch, whatever, $93,105 is significant money. And to most of my friends out there and most of you listening, $93,105 could just be straight up life changing. And it's only going to get better because I firmly believe Bitcoin will go even higher as we head towards hyper Bitcoinization. Again, remember, if Bitcoin becomes the world reserve currency, there's only like 200,000 sats per person. And we already have more than 9 million of them. So if you've been stacking along with us 146 Wednesdays now and stacked 9,310,000 sats next to us, you are already sitting pretty to be financially far more secure than the average person. You're already going to be part of the new global elite at just 9 million sats. And maybe, you're not going to have the 6.15 sats or the 1,000 or the 6.15 Bitcoin or the 100 Bitcoin or the 1,000 Bitcoin of some of the OGs. But this isn't about becoming the richest man in the world. This is about not becoming the poorest man in the world. And I think we've shown two things. We've shown that, well, of course, dollar cost averaging, we've done so at a far cheaper price than had we just YOLO'd in all the way back in July 20th, 2021. And we've shown that even just, $20 a week, which is not going out for drinks one week, not going to a movie one night, not drinking a 6-pack of nice beer once a week, has already helped you stack enough sats that one day I firmly believe that will be life-changing. All right, before I go again, I want to ask you to help support the podcast by following us on Twitter. Again, we're at BTC Bulletin Pod on Twitter. Please rate and review this podcast on whatever podcast platform you're listening to. But most importantly, I just want to hear from you. I want to hear what you like about the podcast, what you don't like about the podcast, any suggestions you might have for the podcast. You can DM me on Twitter at BTC Bulletin Pod and let me know. If you don't have Twitter, we're also on Nostr. The NPub is in the show notes if you want to connect to us via Nostr. If you have neither Nostr or Twitter, you can send me a good old-fashioned email, and the email is bitcoinbulletin@protonmail.com. Of course, if you feel so inclined, you can support us via Podcasting 2.0 by streaming sats or a boost. And if you do send a boost and it's nothing completely out of left field, we will read that on the next episode of the Bitcoin Bulletin Podcast. But either way, don't forget to join us next Wednesday and every Wednesday while we grow that stack of sats, while we march towards that 10 millionth sat. But until that time, keep on stacking those sats, you sexy sat stackers.